Since Ravencoin's launch in January 2018, the project has come a long way. Founded by Tron Black and a team of 430 other developers, the network totaled over 14,000 commits before the chain officially went live. Because Ravencoin was created as a hard fork of Bitcoin, this means that those 14,000 commits were changes programmed on top of the original Bitcoin source code. Think of it as the Ravencoin developers taking Bitcoin's code and reworking it to create something new. Some of the changes they made include the maximum supply increased from 21 million to 21 billion, block time decreased from 10 minutes to 1 minute, the implementation of an ASIC resistant algorithm to discourage warehouse mining, as well as block difficulty adjustments occurring every 180 blocks on average instead of Bitcoin's 2,000 blocks on average. Additionally, Ravencoin was a fair launch, meaning the founders and developers took none of their own coin supply before the cryptocurrency went live. While this bold move undoubtedly provided some transparency and helped attract initial Ravencoin investors, the downside to this strategy is equally as significant. By deciding not to take a pre-mine, the Ravencoin Foundation essentially made itself a shell with no capital and no resources to incentivize continued development or good behavior on chain. The fair launch of Ravencoin has undoubtedly proven to be a double-edged sword for the network. Now, despite this lack of funding, Ravencoin has a thriving community and a very well-developed asset system, which is really what I wanted to discuss specifically in this video. The Ravencore wallet, download link in the description box below, makes it very easy and very low cost to mint Ravencoin tokens as well as Ravencoin NFTs. The Ravencore wallet has a function that allows you to reissue assets from a simple wallet interface, whereas with a lot of blockchains, including my beloved Cardano, they have no such function in any wallet that I'm aware of. The transaction fee for trading Ravencoin assets is also extremely low, making the platform a great opportunity for the manual development of tokens and white paper contracts. However, Ravencoin does not have any smart contract capacity and has no roadmap for ever implementing such a feature. This means that while Ravencoin NFTs remain secure and decentralized, the tokenomics of any native assets are inherently not and will never be. What I mean by this is that if I created my own token to fund a project or to act as a store of value, any expectation of return my investors have would be grounded in my personal trustworthiness and accountability. This is because I am not only holding your investment, but I'm also holding the asset token that gives me complete control over the tokenomics of the asset itself. For instance, if I created a token but I was an anonymous owner, if my identity wasn't revealed publicly, if I didn't have a registered business, you would have no legal recourse if I manipulated my token or just took your money and ran. In the case of Ethereum or Cardano, where there is smart contract capacity, there doesn't need to be trust between two parties involved in a transaction. That process remains automated and decentralized. Without smart contracts, there needs to be an element of trust between an investor and the holder of the asset token. For instance, if I'm investing $1 million into a Ravencoin token, the issuer better have some identity verification, and it probably wouldn't hurt for them to have filed Form D with the US Securities Exchange Commission either. With Ravencoin, we need some centralized layers of accountability when it comes to its assets, which is okay, we just need to be aware of that fact. Ravencoin isn't Ethereum, it's not Cardano, and it was never intended to be. But in order for the network to grow, we need development on chain, we need open source mining pools, and we need to break up the centralization of the network hash rate. Ravencoin assets look very promising, especially with the transaction fees as low as they are, and I think the network could quickly become a platform where alternative securities are traded. My vision is a Ravencoin with hundreds of different open source mining pools and many different token projects being developed and traded on chain. This combination of decentralization and development leading up to ETH 2.0 could really be that springboard we need to boost Ravencoin to that next level of blockchain. If we are successful, I really don't think that a $20 to $30 billion market cap is out of reach. I really don't. But we need to lay the groundwork first. We need to do the dirty work. Hopefully we get these open source mining pools soon. This piece is absolutely critical. I know Tron Black is aware of the issue and has made a public call for the open sourcing of mining pools, but again, there's no capital to help incentivize pool operators to open source their code. There's no reason that they would do it, financially speaking. Now, I've recently gotten word from Austin over at Cryptic Wizardry that we're almost there with his pool. Fingers crossed on that one. Link in the description box below to his GitHub repository if you're interested in taking a peek at what's there currently. But with that being said, I think that's enough for today. If you're a first-time viewer, please hit that like button. Please hit subscribe. Go to mainblockchain.com to check out our Cardano stake pool as well. Thanks for watching, everybody, and I'll talk to you all very, very soon. Bye-bye.